stronger regional presence than national presence. And that is one of the metrics that investors would look at. Of course, then on your operational side, it's a bunch of things. One of the things that helps companies, brands is having franchises if you do, because that improves your overall financial metrics better. It's then, it's the core product offering as well. What you offer, what is the average billing value, what is the average studded mix, because a higher studded mix will make better margin profile. That's the general perception. How do you manage your inventory? Is it automated manufacturing? Is it handmade? Stuff like that, right? So people will like to understand all of that. What is your sourcing mechanism? How do you manage the inherent volatility in the day-to-day gold price? What is your hedging policy? How do you, secure the physical gold that stays in your inventory? So, things like those, all of that ultimately translates into your numbers, right? If you run a efficient and tight ship, you will have good profitability, good return ratios. And when you overlay that with the fact that you're growing, it makes a standard stock market investment case, right? Growth and profitability, growth and return ratios. To do that, of course, you need a good quality management team. That's kind of an intangible. But yeah, I mean, at the end of the day, investors are humans. You guys are humans. It doesn't take much for two humans to interact and form a view of each other, right? So that's another aspect that markets evaluate. We just thought we'll talk about Senco because they invited us here along with the organizers, but also that it's really a case study that everyone should look at. It's a traditional business, right? Mr. Sen, which is Suankar's dad, I think when they migrated from Bangladesh to Calcutta, they started this like decades back, right? And for the longest time, it was a very traditional family-owned business, limited scale, limited presence, good loyal customers in their home market, but nothing beyond that, right? And then somewhere, they decided to kind of move with the times, right? So they raised the first round of institutional capital from a private equity fund called Elevation Partners. It was earlier SAFE. They were also the guys who made Paytm. They made Make My Trip. So, these are guys who invest in smaller companies in the very early stage of their growth, right? And then help them grow. But it didn't end there, right? So they took the money, they did all the, restructuring in their operations, in their business philosophy, etc., that they had to. They opened more stores, they went outside West Bengal, they came to Delhi, they came to Bombay, and that meant that they had to stop being a family-managed company and pivot into a professionally managed company, headed, of course, by the family members. They did all of that, right? And it was a long, 12, 13-year-old journey, and then, in July this year, they went public. Blockbuster is the only way one can explain it, right? You look at the top right-hand corner, that subscription is that if you're offering 1 rupee, how much is public willing to buy? So for every 1 rupee that they were offering to QIBs, which are the institutional investors, there was demand for 190. So 189 rupees went back because they could only offer 1 rupee, right? And overall subscription of 77, right, across different. So for 100 shares, say they were offering to the public, actually the public wanted 7,700 shares. That was the amount of demand for their shares at the time of the IPO. In the middle, you may not know many of these names. You may know some like Nippon, which was Reliance Mutual Fund, Sundaram, Bandhan. But these are all very, very, very marquee names in terms of institutional investors. Good mix of domestic and foreign institutional investors. Jupiter, it's based out of London, is one of the most prolific investors in India for smaller companies, right? And it's a great name to have in your IPO. IPO, we were a part of the IPO. There were some other agencies. It happened in July, as I mentioned, right? We offered the share at 317 rupees. It listed at 400 plus on the very first day. And today it trades at 700 plus. It also flirted with 800 levels, right? So lot of wealth creation in a very small period of time for Swankar and his family, but also the shareholders who participated in the IPO. Yeah, this is the last thing, and just kind of a snapshot of how different listed jewelry companies are perceived by the market. Ultimately, the market arrives at your stock price basis some parameters, right? The parameters typically are your financials, which is your sales, your operating profit, and your net profit. And what we have here is the trading multiples, right? So clearly you would see Titan is the leader of the pack. I mean, they trade at some 87 times trailing profit and some 70 times 1 year forward profit, right? This is, you know, the PE multiple of Titan here and this one, right? So these are the primary matrices for evaluation of stock prices. And then you have the regional players, the Kalyans, the Senkos, and some of the recent guys who got listed. So the spectrum of valuation also varies across different companies. It's not one size fits all. It's as much as 300%, right? So 24x in 1 year forward for Senko to 70x for Titan. On the current year basis, as low as 16 for TBZ to as high as 87, right? Almost 5x of TBZ. So 1 rupee of profit for TBZ is valued at 16 rupees. 1 rupee of profit for Titan is valued at 87 rupees, right? Because of their national scale, the fact that they're a Tata Group company, the fact that they have much better financial matrices. If you see their growth, their three-year average return on equity, 24%. I mean, no one is even close, with the exception of Webhow. And all of that translates into your stock price, right? So to kind of summarize, like everything else in life, you do well, you get rewarded. Stock markets are not very different. That said, there is reward for everyone. It's just the magnitude of the reward that varies, right? Which is why all of these companies went public. They raised money. All of them are doing well. It's just the relative performance which we are trying to capture here. So I think the next sections are fairly technical in terms of the process, timelines, laws, etc., etc. It may be very boring to most of you. So what I'll do is I'll take a pause now. Happy to take questions. If there are any specific questions on the process timelines, we can quickly, visit those slides while trying to answer your questions. Does that work?
Yeah, hi. Good to see all your insights. Very happy to see such great figures. Uh, I'm Tarun Soni from Kothari Jewelers, and we are basically a 104-year-old brand, and we have around 5 branches, mainly in catering to south of India. So now, and we are doing around 100 crores of business annually. So now a very simple question is, seeing this scenario now, what would be the first step towards going into an SME IPO? First question. And second is, how would the valuation of a company be ascertained, Yeah, that's it.
Right. So you're spot on. I think at your scale, the SME exchange is a more appropriate platform. You have quite a few of your community members who listed on the SME exchange just this year itself, right? And they got valued anywhere between 15 times profit to as high as 45 times profit, if you'd see. So I think, yes, you should consider an SME exchange. How you will get valued, of course, one has to do a deep dive into your numbers. But it's a function of your growth and your earnings. Does that answer your question? So first step would be to find a merchant banker who would then guide you through that process, right? And I am happy to, after this chat, I'm happy to kind of give you a few references of people, who have expertise in these SME kind of IPOs. We'll do that.
So you also have an option. If you don't want to go to SME, you got a lot of family offices which have become very big with $1 billion of AUMs, which means that you can try and take growth capital, like what Senco did. They had a private equity partner to get into it. So you can take 20, 30, 40 crores, depending on what your need is. You build up your scale of the business over the next 2 years, then you can look at a main board listing. So once you are ready, once you've decided that you are okay to seek outside growth capital, there are plethora of options. SME, main board, private equity, Uber HNIs. If you have an idea, if you got capital, India has become a market where there are people are willing to line up money. There's no doubt about it.
So money is available, sorry, but it comes, as I said, right, going public also brings certain responsibilities, certain obligations. These are some of the things that anyways have to be done, right? So the merchant banker will help you manage all of this, but you need to reconstitute your board, you have to become a public limited company, you may be a private limited company or even an LLP today, you need to restructure your capital, you need to restructure your constitution documents, whole host of things, right? Not the very fun things to do, but you have to do all of that. So best thing to do is to get a merchant banker who will handhold you through that process.
It takes at least a year from the time you decide to start to get your books in order and to have all auditor certificates, compliances and stuff like that.
Hi, I'm Kishore Kataria from Mahalakshmi Golden Diamonds, Chennai. We are a single store based in Chennai with a turnover of 120 crores. We are in existence for 25 years now. So I'm looking for IPO. It's a proprietorship company right away. So what would be my cost if I look at some IPO of about 50 to 75 crores? What should be the cost of the whole process? Whatever the process, like,
So
as a family jeweler, I'm first thinking about the cost. What are the pros are separate, but what is my outgo for the moment I think of IPO?
So the cost is zero.
Oh,
No, I mean, it's not zero, but you pay cost on success, right?
okay.
So the money is paid out of the money you raise.
Okay.
So at a 50 to 70 crores, you may end up paying 5 to 7 crores. But it is going from the 50 to 70 crores that are first coming in. So nothing is going out of your pocket.
No, that I can understand. But sir, end of the day, it's a liability or kind of, it's expense for the company, right? Whatever merchant fees is.
So it will be about 10% then.
10% of the whole IPO.
Yeah.
Whatever be the IPO.
At that size. At a larger size, it's smaller, right?
Okay. But if it's about 100 crores, then it should be around 10%.
Yeah, you can assume 9 to 10%.
But that's a very huge amount for a small jeweler like a standalone
But
jeweler.
you're getting money, sir.
Yeah, no,
You
that's
have
just
to
I'm
first
asking.
outgrow that mindset.
I'm totally having no knowledge about this,
Yeah.
but just thought about it like,
No,
is it
so
okay?
it's a fair question, but think of it this way. Would you rather have 0 or you would have 90?
Okay.
Because the 10 comes from the 100 that you raise.
I know.
So for me, 90 is better than 0 any day.
Of course.
That's the way
So
to
what
do
is the timeline if you really think of going keenly on that? What is the usual timeline?
So it takes about an year. We have a slide on that somewhere.
Sorry, I was little away, so I came late to the
Yeah, so
session.
no, so we've prepared slides for everything. We just didn't want to bore you with it. So from get-go, you will still take about 30 weeks.
Wow.
But getting to launch the process itself is a 6 to 8 month effort, right? So cumulatively, it could be anywhere between 50 to 60 weeks.
About a year,
About a year.
Okay.
About a year.
Will it be possible to share these slides once we can, because we have missed the previous sessions?
Yeah. I mean, there's no patented knowledge here. It's all public. We
Fine,
just collated. Yeah, we'll happy to share that. The organizers can share it with you. Yeah.
Thank you so much, sir. Thank you so much.
Pleasure.
So just to highlight, and I'm very, very enthused about the fact that, you guys are looking with 100 crores of turnover, you're trying to raise capital. That is going to be the India story for the next 5-10 years. Step in the right direction. For IPO, you probably need a higher scale, but like I said, there are a lot of opportunities. You should try tapping private capital, then get into private equity, and then get into main board. Companies that tend to get listed, unless and until you got a great IPR advantage, you're a tech company, even without revenues, you can get listed. But for traditional businesses, you need a certain scale. But yeah, there are there are huge amount of people are willing to invest their private capital in small companies, and to me that is the way to go. You guys should be very, very aggressive in terms of trying to raise capital. I am repeating, if you don't do it today out of choice, you will be forced to do it tomorrow out of necessity. It is better that you are offensive right now. Today you are for 120, whatever, you'll be there for the last 40 years, 120 crores. It's just a question of time that there'll be three or four more stores surrounding you doing the same kind of business. They are going to come to your territory, you need to go into their territory for sure. And you need access to capital because of that.
No, one of the things, sir, you should consider, I mean, that's a fabulous number for one store, is franchising. If you don't want to open more stores, I'm assuming that if you are able to attract so much business with one store, the brand has a very strong recall. That brand value can be monetized within your town, outside territory, right? I mean, that itself will take you from, say, 120 crores to 200, 300. As I said, some of the recent regulatory changes, this hallmarking and stuff like that, the mom and pop operators, they're getting pushed out of business because they can't manage that process. But they have a captive base of customers. So they'll be very happy to, kind of pivot into a franchisee of a larger brand like you. Right? That's also one of the things that you could consider while you're going public.
I'll just give an example. There's a company that we are working with, nothing to do with golden jewelry. It's a company called Aditya Vision, and they do retailing of consumer electronics. They had one store in Patna for about 10 years. They started in 1999. And then in 2014, they had 8 or 9 stores, right? And the profit in 2017 was about 3 crores. Today, the profit is 140 crores. The market cap is 4,000 crores. And it's listed on the NSE. It was in SME, then they graduate to main board. But that is what capital does, right? So you obviously, after 2014, you had electricity and stuff coming in Bihar, and they just took off, right? And they had access to capital because it was listed. But the scale of the company changed. And today they are able to fight with Chromas and Reliance. They've got a 50% share in Bihar.
No, I think one of the things that we are experiencing across all retail formats, and I'm sure as business owners you'd agree, is that the consumer's aspiration is also growing, right? So, he's willing to spend money, whatever he's willing to spend money. But, he'd like a modern, nice-looking store with nice, presentable service staff, air conditions preferably, right? So, it's just the retail formats are evolving, and that itself needs capital, right? And then I believe at some point of time that's going to be a differentiator. I mean, that worked for Aditya Vision. It's not that people were not selling TVs and refrigerators in Bihar before Aditya Vision started growing. But they offered the same product, but the retail experience was much better. It was a Chroma-like or a Reliance digital-like retail experience, right? And then any day the customer, if he has to buy the same 50-inch TV, he'd rather buy it from a guy who, kind of gives him a better feel about spending his money. So there you go.
Hi, I'm Priyank. So basically, I want to just ask, mostly the retail stores are coming up with the IPOs. So in this sector, in this industry, it's divided into 3 parts: the wholesaler, the retailer, and the manufacturer. Are manufacturer and wholesaler also coming for IPOs? Like the companies are coming, or just the retail segment?
So you're right, it's mostly retail. Now, manufacturing can be looked at. Wholesaling is tough because it's trading, right? There's no inherent IPR or brand that you create in wholesaling. Manufacturing, if there is an export component to it, or if, you have a lot of scale and you have tier 1 clients buying from you, those are the things. So, for example, we have companies in the electronic space, companies like Dixon, companies like Amber. They manufacture ACs, they manufacture TVs, they manufacture phones. And guess what? They trade at a higher multiple than Voltas, which is actually a brand, right? But manufacturing, of course, has its own value, provided you have scale and the quality of clientele. Wholesaling will be a little tough, to be honest.
You do have a company called, I think it's Renaissance Global, which is listed. They started off manufacturing and exporting jewelry. but that is slightly a low margin business. And now, obviously, they've diversified, they've got their own brand and stuff like that. Uh, it doesn't matter what you're doing. The question is, are you good at what you're doing? And he briefly mentioned about the parameters that people look at, which is largely, if you look at it, it's ROE. Again, I'll keep the technicalities aside, but if you put 100 rupees in a bank, you get 6 rupees. Likewise, if you're putting 100 rupees in your business, if you're making 12, it is 12%. If you're putting 100 rupees in a business, if you're making 24, it is 24%. So that is 24% ROE. Higher the returns, higher the valuation. So in manufacturing, if you think you got an edge which allows you to make slightly more profits, then it is an investable idea for sure.
So just to kind of repeat what Nirav said, if you put 100 rupees in Titan, you'd make 24 rupees, which is why they trade at the highest multiple, which is 87 times profit, right? As compared to, say, someone else where you put 100 rupees and you make 6 rupees, and they trade at 16 times multiple. So the framework applies. Manufacturing, as I said, if you have scale, if you have attractive financial metrics, it can be looked at.
हेलो सर, मेरा सवाल ये है कि काफ़ी सारे ज्वेलर्स जो भी आप एक्सपोर्ट की बात या हम आईपीओ की बात कर रहे हैं, तो नॉलेज आप यहाँ पे बहुत अच्छा शेयर कर रहे हैं, लेकिन हमको चाहिए हैंड होल्डिंग सपोर्ट स्पेशली कि इस इवेंट के बाद अगर हम इस प्रोसेस में जाना चाह रहे हैं, क्योंकि ये थोड़ा सा लंबा प्रोसेस भी है, जैसे आपने बताया 36 वीक भी लग सकते हैं और कभी 60 वीक तक भी जा सकता है, लेकिन स्टेप 1 से लेकर स्टेप एंड तक आईपीओ लाने के लिए क्या हमको हैंड होल्डिंग सपोर्ट आपकी कोई टीम की तरफ से मिल पाएगा?
तो डेफिनेटली हम भी कर सकते हैं, बट जैसे मैंने कहा कि हमारी कम्युनिटी को बोलते हैं इन्वेस्टमेंट बैंकर या मर्चेंट बैंकर। ऐसे बहुत सारे हैं इंडिया में। आपका जो बिजनेस का साइज़ है, आपकी जो प्लान है आईपीओ का, उसके हिसाब से ये समझ में आएगा कि क्या आप एसएमई आईपीओ करना चाहते हैं या एसएमई आईपीओ आपके लिए ज़्यादा उचित है या मेन बोर्ड, राइट? और अगर एसएमई है तो एसएमई के अलग से मर्चेंट बैंकर्स होते हैं, मेन बोर्ड है तो मेन बोर्ड के हम भी हैं, और भी बहुत सारे हैं। तो आपको एक मर्चेंट बैंकर ढूंढना है, हैंड होल्डिंग पूरा आपका मर्चेंट बैंकर करा के देगा।
नहीं, अभी जैसे अभी आपने बताया कि मर्चेंट बैंकर ढूंढना है, मेरा ये कहना है कि हैंड होल्डिंग सपोर्ट का मतलब होता है कि जैसे हम तो अभी इस फील्ड में बच्चे हैं, क्योंकि हमको नॉलेज नहीं है, हमारे अंदर जोश सब ज्वेलर्स में है, पैसा सबको चाहिए बिजनेस को ब्रांड बनाने के लिए, लेकिन जो हैंड होल्डिंग सपोर्ट मतलब एक स्टेप बाय स्टेप कैसे जाना है, हमको मर्चेंट बैंक में जाना है, हमको एमएससी में जाना है, हमको एनएससी में लिस्टिंग करना है, हमको कहाँ जाना है, वो स्टेप बाय स्टेप हमको सपोर्ट
मर्चेंट बैंकर ही देगा वो। मर्चेंट बैंकर
और ये मर्चेंट बैंकर से अप्रोच कैसे करें?
हम बैठे हैं आपके सामने, ऐसे और भी बहुत सारे इंडिया में।
थैंक यू सो मच।
Any more questions? All right, I'd like to congratulate the two of you for making this so very simplified. I think you brought in all the complexities to the level of a layman and made it so easy for everyone to understand. Very fortunate few are present here, but I'm sure this doesn't end here and it'll probably continue even after we end the session when these guys will get in touch with you. So ladies and gentlemen, thank you for joining us here. Our next session starts at 3:30. And I'm going to hand over to Ajay to probably just thank the two of you.
Thank you, Nishant and Vipin, coming. And thanks to Shivankar, because in the morning we have an advanced thing. Thank you. It's an eye-opener session for people who are, the queries are still on.
Right, no, absolutely.
And I think so they will bother you more. This session is already live on our YouTube channel. हम upload कर देंगे आपके सुविधा के लिए. Presentation है उनका, तो कोई issue नहीं है. Contacts we can share it. That's not an issue. It's a lovely afternoon that you have given us an eye-opener for a Saturday session. Thank you once again, and thank you for so much.
Thank you so much.
Thank you so much.
Thank you for having us.
Just to inform you, our next session is WhatsApp automation and marketing strategies for B2B and B2C dwellers. This session starts at 3:30. So for all those of you interested, please join us at 3:30 for our next session. Thank you. I'm going to request our speakers to just join us on the desk once again, please. We'd like to share with you a token of appreciation. Mr. Seth and Mr. Singh, please, a little token of appreciation from our end. Thank you both gentlemen. Have a good day.